Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, September 17th, 2018. I want to do a quick overview of some of the things that stand out right now. So this is not a comprehensive view of everything, just the main things that I'm watching where I think trading opportunities are right now, especially the more popular stuff. So we'll start out with the broad markets real quickly. To summarize what happened in the last week or so, we had this 15-minute downtrend line, or I should say a downtrend line on this 15-minute period chart of QQQ. If I don't make mention, you can see up here in the upper left-hand corner. Actually, you can drag that up a little. There it is. So 15-minute chart. And so we had the breakout last week. We traded in this trading range right there. So, at the time you had to take it on face value. Breakout's bullish, but actually it never went anywhere. And what I mentioned last week, and so far you can see that it failed at both price resistance, this 184.85 level. You can see a lot of reactions back here recently, reactions from above that validates that level, as well as a 61.8% Fibonacci retracement. That's this blue line right here. So from the recent highs back in late August to this move down here, you can see we did basically a perfect 61.8 retracement. For those of you not familiar, that's Fibonacci retracement levels are commonly used to gauge for different reasons, but commonly used to gauge where a counter trend bounce may go. And although it's not definitive, you typically see a counter trend bounces, whether it's in this case during a correction, a counter trend bounce, or you can look at during an uptrend, a pullback, and those are usually contained somewhere between these 38, 50, or 61. So in this range here, and so far that's what we have. So now we haven't taken out the recent lows, but at this point, um, we're starting to see a little more evidence that this may have simply been this recent rally up, a counter trend rally in a larger corrective move with more downside to come. With this being, let's say, wave A, B, C. Maybe it morphs into something else. I'm not an Elliottian. I dabble with Elliott wave theory, and some others might on the site might want to provide some counts. But either way, let's just look at that for now. So now, what to watch? I wanted to wait till the open because I've noticed a clear pattern here. Let me see if I can show you that real quick. Yeah, I wanted to show you on the 60-minute chart. Now this chart's quite busy. It's one of several charts that I have up for the NQE mini futures. But if you look at the crosshairs, for example, I'm going to put the crosshairs, and you look at the very bottom of the screen, you can see the time pop up. So there's the 9 o'clock bar. This is our opening bar right here, and you can see that big red candle so far. And when you go back over the last few days, and if I look at all these big moves here, let me just highlight those real quick. And you can, of course, you can replicate this on your own chart. If you don't have a futures account, investing.com provides free real-time data on futures. But you can see all these big moves here recently. That's what I'm highlighting. When you put the crosshairs, you see they all came around right around either leading up to or just after or around the open. So there's an open on whatever the 12th. Here's the open right about there on the 11th, and so on and so forth. So you can see again these big spikes. That's where the sharp moves have come in the most of the big gains or losses in the markets have come right after the open recently, with trading then flat, calming down throughout the rest of the session. So, anyways, a point of observation, and let's move on, get back to the charts, and we'll wrap this up. So now levels to watch for QQQ. These are the same levels before. I mentioned when we had the breakout here, we had intersecting downtrend line resistance as well as price resistance, 182.65. Resistance once broken becomes support. So now that is support right there. In fact, I'm going to pause a bit. Okay, sorry. I come into the day short the NQs at the open. When I saw a level, I'm going to show you in a second on the SPY go. I was waiting, saw this level. We were trading right here underneath that 183.69 level, and I was waiting for a level in SPY to go. When that happened, I added to that position for just a quick trade, and I just wanted to cover that real quick. So sorry for the pause. All right, back to the video. So that's it. So 182.65. You can see we've already, since I paused it and covered that position. Again, that was just a day trade. We've already bounced there. I'm going to leave the swing on for now because, like I said, I'm at this point in time. I'm starting to see increasing evidence. Nothing's set in stone yet. There's still work to be done, but increasing evidence that this was, as I said, a counter trend rally. So you want to watch for this level. It's pretty well defined. You can see it contained a lot of reactions here. So certainly a significant technical level. If that goes, I don't see a whole lot, minor resistance along the way, but that'd probably take us down here and I think beyond. And why? Because if so, this was a failed breakout so far. We had a breakout, went traded around sideways for one day, and the breakout failed. And so I think if my assumption is right, then we'll continue down lower, take out those recent lows, and then we have to zoom out to a longer time frame. This also plays into it. This is a 60-minute chart of QQQ. Here's the trend line. In fact, this trend line goes back even farther. Here it is on a 2-hour chart, 120 minutes. Goes back to early April right there, and you can see, and I talked about this recently, we broke that trend line, back tested for a while. We popped above it when we broke out on that 15-minute chart, but so far that proved to be a whipsaw signal. Sometimes the market doesn't make it easy on you, so they popped above there, which on face value is bullish because that made this a false breakdown. I know it sounds like a skit of who's on first, but that's what happened. So we had a breakdown, back test. It looked legit, and we took it back. But again, this breakdown was suspect, as I told you at the time, because we hadn't seen Amazon break its comparable trend line, XLK, the tech ETF, SPY was still above trend. So therefore, I was a little bit skeptical or wanting to see additional evidence. But here's what's happened. So now we've got back up. The bulls had the opportunity to take it and run there. I'm sure there were some shorts that jumped in there, myself included. But again, there wasn't enough evidence. This recovery of the line was that trend line was a little bit, quite a bit lackluster. It wasn't impulsive, and now you can see we failed it. So let's just say bull trap, bear trap, or bear trap, bull trap, whatever you want to call it. Maybe wait for a little more evidence. If you're already short, things are looking good. If you've been short and you rode this bounce out, or you're shorted last week on Friday, you're looking good, and you'll be looking better right here if and when those recent lows go, and then that opens a door. Again, the scenario has been laid out for a while now. Since we're up here, we had a negative divergence on the 60-minute chart, break of the trend line. So this was my first target, which was hit, which was the trend line. We went a little bit below, so maybe a counter trend rally, and that would take us down, obviously, to my next target here, 177.91, and potentially any or all these other targets there. You can see the levels. So that's QQQ. So far, looking like that kind of brings that near-term bearish outlook back into play now that 15-minute breakout has failed to really play out for anything much more than a one-day bounce. But again, go back to that 15-minute chart. We haven't completely taken it out. I mean, sometimes you break out. We could come all the way back here, back to this trend line, and then take off. We'll just have to watch the charts, see how they develop. But those are the levels I want to watch. Oh, and what might obscure the near-term bearish case now, or foil it a little bit, not completely foil it, in lack of a better word. Right here I'm looking at a couple levels. Let's just say there's a gap. If you really zoom in right here, let's just say if we take out more than backfill this gap. So in other words, if we go much above 184 right now, that's probably going to open the door for move higher. Obviously, if we break 184.85, that's a very important level, in my opinion, right now. Near term, again, this is active trader stuff. Lots of reactions there. That's where it failed. There were reactions in the past. So if we take that out, that's going to be pretty bullish. We're going to take that trend line back, and that would probably, although my first target with resistance there is about 186.13, but I can just say that will probably open the door for new highs in QQQ if that level is taken out, and very likely if that level is taken out. That's not my preferred scenario. This is my preferred scenario right now, but that may change. I told you I'd get to SPY. This is what I was watching on SPY. This uptrend line, it's actually a wedge. You can see a small wedge here on the 15-minute chart. We had divergence right here. You can see there's your negative divergence. Now what I've done is I've extended this trend line. I was waiting for this to break, which it did. So there's a sell signal. Again, the market's been whippy. Here's a false sell signal right there, but we did have one today, and that's where I shorted NQ. But I covered it because the Nasdaq dropped quick. We had that big thrust down, but where do I think SPY is going? And here's what I'm looking for. Again, I don't care to trade SPY very often. It's too diversified and too diluted, meaning too many sectors. That's going to hold it down on the upside and it's going to hold it up on the downside compared to QQQ. But with that being said, levels to watch. There's a big old gap to be backfilled here, 289.40. So with my expectation of more downside for QQQ, I certainly think SPY will follow. What you want to see is this level taken out right here, those recent lows. That will open the door for a gap backfill. If you are an ES or a SPY trader, expect a reaction there. But again, I think that can open the door to more downside, especially based on this wedge pattern. If you take the measured target, the widest part of the wedge, I probably don't have that wedge line. Yeah, close enough. Widest part of the wedge, add that to where the prices broke down, and that would be your measured target. Again, it's a small pattern, but that would take us for a gap backfill. So that points to a possible short-term trading up on SPY or ES with a stop not far above 290.75. One more thing to note here. I like to see divergence with clean separation between the peaks like we had right here as far as this negative divergence back in late August. Sometimes this kind of divergence plays out. It's flattish. You see, it's certainly negative divergence, the MACD or the PPO, and this is a MACD I'm using on a 15-minute, making a lower low. So is the RSI with higher highs. But there is a potential. We could draw this, we could extend this trend line out, capture that, and extend these divergence lines, and you may see something like this. So if the SPY can bounce here, and this is one reason I just covered that partial position of NQ, we could see another thrust up that would actually look real nice, set up some clean divergence there, and then set the stage for a reversal. That could also come in right around this previous high right here on SPY. Trying to cover that late August high. So that's one scenario to watch. But as of now, um, let's just again watch those levels I pointed out. It's really hard to say. I can certainly give this trend line some validity here. So let's just say let's go with this wedge for now. This would be your next sell signal on a break below those recent lows on SPY, and that's about 280. We'll call it 290. And again, I never, even if I'm not trading SPY, I will watch SPY. In conjunction with that QQQ. So basically there it is. They're both at support. So far QQQ is defending that 182.65 level as I'm doing the video. So those are the levels to watch. 182.65 or pretty much, let's keep it simple, the lows so far at this point in QQQ and SPY. If we move much below there, especially impulsively, we're probably going lower. Otherwise, they may want to defend it here. And so it's anybody's game. So right now, that's why I lightened up. I'm going to watch and see who wins this battle between the bulls and bears with these very near-term levels. All right, enough on that. Let's move on. I'm not even going to bother with the futures right now, unless you want. If you're a member of the site, drop me a line in the trading room. I'll give you an updated chart of the futures. But the other things I wanted to point out, or one other thing really, is gold. But to talk about gold, I like to talk about the U.S. dollar. Just to mention, last week I had highlighted this support level here, the 116.582 level. Looking for a bounce off there. That didn't happen, but when we broke, I said it was, far from over. There was still very good support. You can see here, I'm circling all the reactions as to why that line is there and has been there. Lots of reactions off this level, and that's 116, 196, and I mentioned that would be the next support level. Drew a little scenario. Hope that should have been an arrow of a reversal there, and so far so good. However, there's some work to be done. We need to take out that recent reaction high there and take out this recent reaction high. I don't know where that 117.43 level is coming. Must come from back in the past, but let me move that line down to this previous reaction high. So you want to see this for the gold trade. Will really help out. Remember, bigger picture is we've been pushing against this downtrend line on this daily chart I just flipped to. If I didn't make mention, we were just looking at a 60-minute chart before. Big divergent low here on the daily chart. I think if we get a little more upside here, we take out these recent highs right about here. Let me put crosshairs on right about here. Here, I'll give you a clear line. We take this out, these recent highs, I think gold can explode. That's my opinion. I think we can see a nice explosive or strong rally in gold. Let's not even look at GLD because that's a little, let's look at the futures. That's where I've been focused lately. So I want to see that. So far, so good. Everything for weeks now, if not months, has been playing out as expected, playing out very well to the technicals in the euro US dollar, the case for a significant top in the euro, bottom in the dollar, and also bottom in gold. So let's look at gold futures and we will wrap this up because the level that I continue to watch. Where is it? Here we go. GC, click here. All right, is this 12, 13-ish level? Now, we spiked above it briefly last week, but it was a very brief whipsaw signal. It was really not any impulsive buying, any follow through. We snapped right back down. So that's just what we call a whipsaw signal. And here's that trend line. So there's a combination of down trend line resistance now that's continuing to firm up. In other words, we've had a couple more reactions recently there. And you have this 1213 horizontal price level you can see here acted very much as support right here. Once support once broken, you saw very impulsive selling. That helps to validate that as an important support level. We didn't just limp down and trade through. We had an impulsive sell-off once that level went. We had a very strong snapback rally, and this was what I call a momentum-fueled overshoot. We had a lot of, look at that, look at the velocity coming up there. So we hit it briefly, spiked above it, and fell back down, and then trading sort of normalized, if you will. It started tapping again. So that's it. This is what I'm looking for. So to be safe, you want to see this level go, but I think once you get it, I think once you get a break of this trend line in 1213 the next time around, I suspect, especially if the euro plays out, gold will take this out, and I think you'll see. I think we'll see a pretty swift move. I would suspect. I think there'll be a lot of short covering. There'll be a lot of longs that pile in as well for the breakout. So right now, that's just a setup. And like any setup, I'll tell you I'm long and have been long. I took long on this. I took a position of GC on this breakout, but I held on to it because the case for the euro is still there. Ridden it out a little bit underwater, but I certainly plan to add to that if and when we get this scenario as well as the euro playing out. So really two things I'm watching right now are the broad markets, those levels on SPY and QQQ in gold. There's plenty other opportunities out there, and I spent a lot of time reviewing the charts this weekend. And one of the things that really stands out to me is the semiconductor sector. There's so much there to cover that I'll have to do that in a separate video and/or some follow-up posts on the site, which I'll do ASAP, at least some point early this week, probably today. Let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.